trading engulfing candlestick pattern can literally give you an edge to trading profitability across all financial trading markets, whether crypto, forex, synthetics, or even stocks, right? But the beautiful part of it is that it doesn't matter whether you are a beginner trader, a day trader, or even a seasonal trader. Okay, what really matters here is knowing where and how to trade this engulfing candlestick pattern. And trust me, this strategy can literally take you from being an unprofitable trader to a profitable trader in a shortest period of time once you actually know these three basic components I'm about to mention in this video, which is number 3 is very, very important. And that's why you need to stick to the end of this video to actually understand how to trade engulfing candlestick pattern, because most beginner traders fell a victim of not knowing where and how to trade this engulfing candlestick pattern. And that's why whenever they spot engulfing candlestick pattern in the middle of nowhere in the market, they tend to enter the market and get stopped out. All right, so in this video we're going to be explaining and dishing out these 3 key components to look out for whenever you want to trade using this engulfing candlestick pattern as your strategy, right? So in case this is the first time of you coming across this channel, do well to like this video, subscribe to this channel, and turn on the notification bell so that you're getting more and more crypto, forex, and other financial trading content that is based on educational purpose, all right, and also other make money content as well. Before moving on to our chart right here, let me explain what engulfing candlestick pattern is all about, right? The word engulf, okay, the word engulfing literally means when one big candle that is as twice as the previous candle completely covers the previous candle or engulf the previous candle. That means we have an engulfed candlestick pattern right there, right? And we have 2 types of engulfing candlestick pattern, right? We have 2 types of engulfing candlestick, which are the bearish engulfing candlestick pattern and the bullish engulfing candlestick pattern, right? So we're going to move on to our chart right now. Let me show you exactly how this bullish and the bearish engulfing candlestick pattern looks like. So moving on to our chart right here, you can see on the left hand side right here, we have the bullish engulfing candlestick pattern, right? So here we can see that this green candle, which is the bullish candle right here, completely engulfed the previous red candle, okay? And this signifies that the buyers are ready to take over the market, right? They're ready to push the price, okay, to the upside. So as you can see, the green candle that is big and is as twice as the previous candle, which is the red candle. So which means this green candle completely engulf, okay, or covers the previous candle. All right, so which means this is what a bullish engulfing candlestick pattern, right? So on the other side, we have the bearish engulfing candlestick pattern. As you can see, the red candle right here completely engulfed the previous green candle, and this red candle is called bearish candle, right? It's bearish candle. It's a candle that signifies the bearish momentum, which means sellers are stepping into the market and they want to take over the market to push the price to the downward side, right? So, but how do you actually trade this engulfing candlestick pattern? It's very, very important. So these 3 key components: number 1, you must make sure that you spot out this engulfing candlestick pattern at the end of either a downtrend or uptrend, because this engulfing candlestick pattern signifies or is showing us or is telling us that the market is about to reverse to either the upside or to the downside, which means it's a trend reversal pattern, right? So here, for us to trade this engulfing candlestick pattern, okay, if we want to trade the bullish engulfing candlestick pattern, we must make sure that we look out for this bullish engulfing candlestick pattern at the end of the downtrend. As you can see, let's say the market was previously a downtrend right here, right? The market was previously a downtrend, coming down. So we want to look out for this bullish engulfing candlestick pattern at the end of the downtrend, right? So it can help us to make the decision to buy, okay, following the buyers, right? So you can follow what the market is doing, so we will not go and be doing otherwise. So on the right hand side, the same thing goes with the bearish, okay, which is the opposite side, right? So let's say the market was previously uptrend, the market was coming up, and it gets to this particular end, right? So the bearish engulfing candlestick pattern now form, so giving us the signal that sellers have stepped in and they want to push the price to the downside. So we must make sure that we spot this either bullish or bearish at the end of either the uptrend or downtrend. So that is number 1. So number 2 is that we must make sure that this either bullish or bearish engulfing candlestick pattern is resting on the key zones in the market, right? It's resting on the key zones, right? We spot it at the key levels or key zones, and the key zones we have in the market is support and resistance levels, or demand or supply zones. So for here, right here, for the bullish engulfing candlestick pattern right here, you can see this is our demand level. So the market was previously a downtrend. So for the market to actually turn from downtrend to uptrend, it needs to react to the key levels, which is the support level or demand. You can either call it a support level or a demand level, right? So on this demand level, this is where we want to look out for bullish engulfing. So once bullish engulfing candlestick pattern form here, right, you want to actually buy, right? We don't want to see this bullish engulfing in the middle of this downtrend. No, we don't want to actually trade it, because sometimes if you enter the market might start, continue the downtrend movement, hitting your stop loss. So you don't want to do that. So you want to actually look out for this bullish engulfing at the key zone, like the support zone or demand zone, right? So it can actually help us to make a quick decision to buy, right? So here, the bearish engulfing, let's say the market was previously uptrend, going up. So we want to actually look out for this bearish engulfing on the key resistance level or supply zone, right? So we want to look at from where this bearish engulfing actually form. We don't want to take any trade whenever we see this bearish engulfing in the middle of the market right here, right? You don't want to do that. We want to actually take the trade when we see that at the supply level or resistance level, right? We want to look out for the bearish engulfing so that we can now take a quick decision to sell the market to the downside, right? So that is number 2, right? So number 3, which is very, very important. Number 3 is allow the complete formation of either of these engulfing candlestick pattern, bullish or bearish. Allow the complete formation of it, because most traders do, once the formation is not yet complete, and because the previous candle is big and twice as the current candle is big and twice as the previous candle, they will not want to go and take the trade either buy or sell. Okay, but the candle is not yet formed, like the completion is not yet over yet, right? So you're not going to take. Mind you, this is one way of risking your money in the market. You may end up losing a lot of money in the market, right, consistently, because you don't wait for the complete formation of this bullish or bearish engulfing candlestick. So we are going to move into the real chart. Let me show you exactly how these things played out in the market, right? So this is the chart right here. Like I said, this works across all time frame, right? This will work across all time frame. We're on BTC, USDT, and this is 15 minutes time frame, right? This is 15 minutes time frame. Okay, so as you can see here, we want to mark out the key levels, right? So we want to mark out the key levels right here, right? These are key levels, right? These are key levels right here. So we want to be looking out for what happened in this key level, on this resistance level, right? Okay, this is our support level, which is our demand level, right? So let me zoom this so that we can see clearly what's happening, all right, or what happened. So on this resistance level, which is our supply level, so what we can see is that the market was previously an uptrend, right? Remember, we must spot out this on the key level. That is number 1, and we must make sure that it's at the end of a particular trend. So in this case, the market was previously uptrend. So as the market is coming up, it gets to this zone, right, which is the resistance zone or supply zone, right? So the sellers now step in, but it has not given us that bearish engulfing, right, to signify that the market is about to sell proper, right? So as you can see what happened here, right? What happened here? Can we see the bearish engulfing right here? This is not a bearish engulfing, but here we can see that this is the bearish engulfing, signifying that the sellers have stepped in and they are about to sell massively and aggressively. So right here, so once you have spotted this, okay, on the key level, which is the supply level, as you can see it. Let me map it out so that you can see it. You can see it clearly. So this is it. This is it, right? So upon the completion of this candle, this bearish engulfing candlestick, right? Upon the completion of it, which is number 3, okay, component, we want to take a sell position, right? So we now pick our sell position to at the end of the bearish engulfing, right? The low of the candle, right? We now place our stop loss above the high of the bearish engulfing, right? Like right here. So we now, our take profit will be at the extreme demand level, right? At the extreme, we can decide to put at the extreme demand level like this. So our extreme demand level is this, right? So all right, so as you can see, the market now starts to actually come down. So as we can see what happened here, the market starts to consolidate a little bit here. Okay, the sellers are still there. So, and from here, the market now flows down, reacting to our key support level. So this trade now gave us up to more than 14 risk to reward ratio, right? More than 14 risk to reward ratio. So imagine you held this trade for how many days? From Friday, right? From Friday 25 January 2025, right? To up to what? This day, Monday 27, which is literally 3 or 2 days, right? Literally 2 or 3 days to hit your take profit, right? You already made over 14 risk to reward. So if you are risking $100 on this trade, you're making 14 times of $100. If you're risking any amount you risk on this trade, you're making 14 times, more than 14 times of it, right? So this is for the bearish engulfing candlestick pattern, right? So let's look for another example of this bearish engulfing before we move to bullish engulfing, right? So look at another example here. So here is our support level, right? Or supply level, right? Here is also our resistance level, not support, resistance level at this zone, okay, or supply level, right? So here, as you can see, the market after the consolidation, what happened? The market pushed further down and creates a giving us that bearish engulfing candlestick. As you can see it here, giving us that bearish engulfing candlestick. So we wait for the completion of this pattern. Okay. We wait for the completion of it, so we can take our sell position right there. So put our stop loss above the high of the candle, right? So we can now drag the take profit down below, right? You can now drag the take profit down below here. So right, the demand level. So as you can see, this trade actually gives us up to 11 risk to reward ratio, okay, from the day we took the trade. So we actually took this trade, let's say we take this trade Sunday 26 January 2025, and it actually hit our take profit on the Monday, which is 24 hours, okay, which is literally 1 day, right? 27, we took it on Sunday and hit our take profit on Monday, right, which is 24 hours profit, okay, 24 hours trade execution, right, giving us that 11 risk to reward ratio. So this is a strategy that have worked over the time, right? So it's one of the profitable strategy. When you spot these three things, these three key components, you always stay profitable, no doubt, right? So let's look for bearish engulfing. Remember, you don't want to take trade when you see the bearish engulfing in the middle of this market. You don't want to take a trade here, okay, because you may see a bearish engulfing here. You may try to take the trade, and the trade might reverse and go against you and hit your stop loss, and that's just it. So you want to spot it where the big players, which is the big sellers, step in, and that's where you want to look out for this engulfing pattern and trade it, right? So on the key support level, let's look at the demand level, right, to see whether we can see it, right? So here, this is our demand level, which is acting as also our support level, right? So as you can see here, and you can see another one here, you can spot another one here, you can spot another one here, right? So let's say for this one, okay, we map it out like this, right? Let's say we map it out like this, right? This is our support level, right? So as you can see here, this is bullish engulfing, which means this large green candle completely engulfed the previous one, right? This large green candle completely engulfed the previous one, okay, giving us the bullish momentum that the buyers have stepped in on this demand level, also acting as our support level, right? So we can decide to buy when this pattern completely form, right? When it completes the formation cycle, all right? We don't want to take a trade when this bullish candle is still on the formation. We don't want to take a trade. We want to take a trade after the formation of this bullish candle, right? Giving us the bullish engulfing candle, which means the previous candle, which is the red candle, is have been completely engulfed, right? So we can start to take our buy position here. So we can start to take a long position right here. Our stop loss at the low of the bullish candle, right? So what happened here, right? What happened here is that we can start to take profit at the extreme supply level, right? Extreme level right here, okay? Extreme level right here, right? So what happened here is that this is our risk to reward up to 14. This is 14 risk to reward. So we can actually profit from this trade, okay? Holding this trade for like how many days from today, from the day we, let's say from 15 January 2025 up to the day it hits our take profit, which is on 17, which is literally 2 days, right? 2 days on swing, right? 2 days swing trading, we made over 14, okay, risk to reward ratio, right? So if I'm literally risking $100 and you're making over 14 times of it. So let's look for another example, right? Let's look for another example right here. So let's look for another example, okay? This is also support level or demand level right here. Here on this spot is also our support level. Here is also our support level or demand level. As you can see, the sellers took over. You see why I say that you should not, this is an example of where I say that you should not take a trade whenever you see a bullish engulfing or bearish engulfing at the middle of the market. As you can see here, this is a bearish engulfing, okay? This is a bearish engulfing, right? So after this bearish engulfing form, this red candle formed again, okay? But then it didn't push the market down because it's currently on the on the demand level. What happened? It pushed the market further up, and if you take the trade here, it can literally hit your stop loss. There's no doubt about that. But then what if you actually spot out the bullish engulfing here, okay? See the bullish engulfing, and it's currently resting on the key demand level, okay, or support level, right? So this bullish engulfing, as you can see, the previous green candle engulfed the current, this green candle engulfed the previous red candle, okay, giving us the bullish momentum that buyers have, okay, have taken over the market, right? So you can decide to long this market or buy this market at the end of this this bullish candle, right? And stop loss at the low of the of the candle, okay, which is near the demand level. So we can start to drag our take profits to the extreme supply level, right? Extreme supply level, okay? Extreme supply level, right? So what happened here is that our risk to reward here is just 3, okay? 3.6 risk to reward, right? So you can see what the market did here. The market went up, consolidate, go up, and hit take profit. Within how many days? This is Thursday, 16th January to Friday, which is 1 day, 24 hours, and you've made over 3 risk to reward. If you're risking $100, you're probably making over 4 times or 3 times of it. There are 3 times of it, right? So as you can see, you can go ahead and on and show you different places where this strategy have worked out. So in case you are a trader and are finding it difficult to use this particular engulfing candlestick pattern, right? So if apply these 3 key components, okay, you can be able to stay ahead of the game whenever you trade crypto, forex, synthetics, or whatever market you are trading on, right? So this is the end of this video, right? So in case you find this video helpful in any way, do well to like this video, subscribe, and hit the bell so that you'll be getting more and more educational content I'll be dropping. And hence you are sticking with us on this channel. You always learn how to actually trade the crypto market profitably, okay, and also other content or how to make money in the crypto market, okay? In case you want to join our community where we drop daily signals, educational content, and also go live trading the crypto market, you can hit the link in the description and join our crypto community where we do all of those stuffs, okay? And if you're looking for an exchange to create, okay, where to buy your BTC, Ethereum, and other cryptocurrencies, I recommend Bybit. The link is still in the description of this video. Hit the link in the description of this video and sign up on Bybit, right? And you can also claim the first time reward, okay, that is waiting for you, right? So you can claim up to $100 reward once you make your first deposit, right? So, and if you want to actually know and learn how to use support and resistance the right way, and trade support and resistance the right way, do well to check out this video right here so that you can watch and learn how to trade support and resistance. All right. So I can't wait to see you on the next video. Bye for now.